Hello friends, this is Bhaven, certified financial planner, and you're watching this video on the YouTube channel The Art of Wealth Building. Before we proceed, if you're watching this video for the first time on our channel and if you wish to increase your knowledge on the personal financial planning, do consider subscribing this channel. We upload one very good video on Sunday and on Wednesdays. So, before we proceed, I'm assuming you are an NRI and you hold a property in India which probably you want to sell and you've got a decent offer from a buyer. Now, when you want to sell this property, what is the most crucial thing that you need to consider is tax implication. So, let's first try to understand what is the TDS on the sale of property by a NRI in India. If the property is held for more than 2 years, it is considered as a long term and the buyer deducts 20% TDS as a long-term capital gain tax plus surcharge and cess. And if the property is held for less than 2 years, tax is applicable as per the income tax slab rate of the seller. So now let's try to understand what is TDS at lower rate. If tax deducted at source is more than your tax liability, then you can opt for tax refund at the end of the year for the excess TDS. However, if you wish to avoid this process, you can apply for certificate under section 197 of Income Tax Act 1961 that allows you to file for a lower TDS rate. Plus, note that you must apply by filing form 13 before you execute the sale agreement. The accessing officer will determine the TDS after calculating the capital gains. This will put the money in your hands instantly instead of waiting for the refund. And in case if there is a loss, you can get the zero TDS certificate as well. So now, before proceeding with this video, if you wish to get your personal financial planning done and if you wish to understand how you can achieve your personal financial goals like retirement planning, maybe planning for the vacations, buying a car, buying a house, all of these goals, if you want to understand how you can achieve them with your personal financial plan, you may consider consulting for the personal financial planning and you may WhatsApp on the number displayed on your screen. So now let us try to understand how can a NRI save tax on the property sold in India. Capital gains made through the sale of property can be reinvested in India to reduce tax liability. If you invest the capital gains in buying another property within 2 years, then the profit generated from the sale is exempted from tax. Similarly, under section 54 EC, you can invest the profit from the sale of property in capital gain bonds within 6 months to get an exemption. These bonds have a lock-in period of 5 years. Now, as an NRI, you decide to take the money back to your home country. So what is the procedure? What do you need to do? So the maximum limit to take the money back to your home country is 1 million USD. And what is the procedure? Let's look at it. If you wish to repatriate the proceeds from the sale of a property, you will need to submit form 15CA and form 15CB. While you can fill out and submit form 15CA yourself, form 15CB has to be signed and submitted by your chartered accountant. So I hope by now you've got a fair idea in very simple terms on when an NRI decides to sell a property in India, what is the TDS, what is the lower TDS, how can you save tax on the capital gains by investing in India, and to repatriate the money back to your home country, what is the procedure in very simple terms. So I am hoping that you've got to learn something from this video. You like this video, subscribe to this channel, and if you wish to consult for the personal financial planning, you may WhatsApp on the number displayed on your screen. You may visit our website, theartofwealthbuilding.com. You may also follow us on our Instagram page by searching The Art of Wealth Building. So finally, thank you so much for watching this video till the end. I hope you will have a good day. Thank you.